manufacturing is always a challenging field. I call it challenging rather than struggle. Biggest challenge we faced, of course, have been the worst of the business cycles we have faced during the year FY16, FY17. The biggest positive moments out of this journey were our success in launching vegetarian capsules for the first time in India.
Hello everyone, I am Ankit Kanodia from SmartSync Services, a SEBI registered investment advisory firm. Thank you for joining us on this weekend. Welcome to the second episode of Mission Smile Leaders Ka Falsafa. Here we are going to have management of listed businesses in India, and we learn from their journeys, struggles and victories. For those who are watching this for the first time, Mission Smile stands for making new stock market investors learn it through engaging research. Before we begin, I would request everyone to please keep yourself on mute and switch off the video so that we can have a seamless discussion and soak in all the wisdom. You may type in your questions on the chat box. We'll take all your questions at the end of the session. So let's begin now. In our second episode of Leaders Ka Falsafa, we have Mr. Sunil Mundra, MD of Natural Capsules. Mr. Sunil Lakshmi Narayan Mundra is a chartered accountant with over 37 years of experience in accounts, finance, as well as in the pharma industry. As the Managing Director of Natural Capsules Limited, since its inception in 1993, he oversees the company's commercial operation and is driving force behind its marketing activities. Mr. Mundra's impressive track record extends beyond Natural Capsules, as he also serves as a director in 4 other companies, including Natural Biogenics Private Limited, a subsidiary of Natural Capsules, Tajos Investment Private Limited, Square Plus Life Science Private Limited, and Natural Phyto Pharma Private Limited. Sunil ji, before we begin the session, it would be great to have an opening remark from your side.
Thanks, Ankit. Good morning, everyone. At the outset, let me thank SmartSync Services for arranging this call for members of Mission Smile Group. Natural Capsule is a 30-year-old company started back in 1993. We are in pharma B2B space, supplying inputs, namely capsules, to pharmaceutical finished product manufacturers. We are presently having 2 manufacturing locations for capsule manufacturing and an upcoming API facility for our subsidiary company, namely Natural Biogenics. We started our journey back in 1993 by putting up a Bangalore facility with 3 capsule lines, then went on to acquire a facility in Pondicherry in 2003. We did all subsequent expansions at regular intervals over the next 10 years in Pondicherry facility. In this period, our installed capacity for capsule manufacturing increased from 1 billion to 7 billion capsules. We did further significant expansion during last 3 years, wherein our capacity on completion of the current ongoing expansion plan will increase to around 22 billion capsules. Meanwhile, during 2017, our board wanted to diversify in any related line, and we chose API being aligned to our existing pharma business segment. So we initially thought through and made a strategy to put up a steroidal derivative manufacturing unit. Steroidal API being a significant kind of API therapeutic segment, we decided on steroids. Steroidal derivative portfolio also has quite a number of APIs. But then we changed our strategy, later decided to establish a fully integrated manufacturing facility, which could be fully backward integrated, consist of fermentation and synthesis steps. So we started our R&D center for establishing this facility back in 2008. 2018, and have since been seriously working on various aspects of this project. Currently, we are in the process of commercially establishing this API facility, and maybe in next few months, this facility will start production. I think with that, I'll close my remarks. Back to you, Soham.
Thank you so much, Sunilji. And I would also like to thank Mr. Abhishek Mehra, the investor relation consultant to Natural Capsules, for helping Mission Smile and SmartSync Services with this opportunity to host Sunilji. As SmartSync Services is a SEBI registered investment advisory firm, we would like to make a disclosure as per SEBI norms. At the time of this session, I and my company have no holding in the stock of Natural Capsules, and we currently have no recommendation on the stock for our clients. And today's discussion will anyways not be on quarterly numbers or financial guidance. It is more about understanding the business of Natural Capsules in detail from the horse's mouth, Mr. Sunilji. So today I'm going to take a back seat as we have two hosts who will ask the questions to Mr. Mundra. Host number one is my dear friend and our Mission Smile member, Soham Das. Most of you would have already watched the deep dive session on Natural Capsules by Soham last week on our platform. Soham has been a value investor since 2009 and has prior experience in building and trading with quantitative techniques at a time before they were fashionable. His work took him to work with hedge funds, wealth management desks of international banks, and sell-side research. He has extensive experience in distressed asset investing, small and mid-cap equity, and high-yield fixed income research. He has worked in the past with Deutsche Bank, Nomura, and Bank of America. Let me now introduce the second host for the day, Mr. Navid Virani. Navid Virani is a co-founder of Bastion Research, a boutique research company providing research to various family offices and institutions. Navid holds a 7-year professional equity research experience and has been associated with organizations like Stoic Investment Advisors and Concept Investwell PMS before co-founding Bastion. Navid is a CFA charter holder and a marketing graduate. He is an avid reader and an investor who is passionate about understanding new businesses. I know that you are here to listen to Mr. Mundra and not me, so I'll shut up here and would ask Soham to kickstart the interview straight away with the first question. Over to you, Soham.
Thank you, Ankit. Before I jump to the first question, let me give the usual disclaimers. So, Soham Das, CFA, and his family associates have vested interests in Natural Capsules and are invested in the same in their individual capacity, and may engage in transactions in time to time in these securities, that is Natural Capsules. Soham Das and his family associates have not received any compensation and has not been associated with the company at all. With the requisite disclaimers out of our way, and before we start our conversation, allow me to thank Mission Smile and Ankit Kanodia for bringing institutional level access to us DIY investors, connecting us to the very heartbeat of Indian entrepreneurial energy, of which Mr. Mundra today is a glowing epitome. Let me also take this opportunity to extend a heartfelt thanks and welcome to Mr. Mundra for agreeing to talk to us on a beautiful Sunday morning. And Mr. Mundra, thank you once again.
Thanks, Soham.
And with this, let me dive into the first question. And you have already given a flavor of your journey, but today, Natural Capsules has completed 30 years of its operations. Almost a good time as any to revisit your history. So please take us through your biggest struggles and victories of the last 30 years, and of course, your journey and evolution in these years.
Yeah, we as a family were in API trading business since 1987. And during the early 90s, we thought of diversifying from trading to manufacturing. So we started looking around in those days, initially looked at API manufacturing. But then through our interactions with those many customers whom we were supplying APIs through our trading business. We got a feedback. In those days, there used to be a great shortage of empty capsules. And that's how we thought of getting into empty capsule manufacturing. Um, Actually, manufacturing is always a challenging field. I call it challenging rather than struggle. Biggest challenge we faced, of course, have been the worst of the business cycles we have faced during the year FY16, FY17. The biggest positive moments out of this journey were our success in launching vegetarian capsules for the first time in India back in 2002. Probably we were the only one of the first few, maybe 3 companies in the world to have done so. Then we were able to launch our 5 million capsules per day producing machine back in 2020. Then other big breakthrough was our API R&D in 2019 when we made some success in our fermentation technology and we filed patents over there. Yes, back to Song.
Thank you, Mundraji. That's a very inspiring journey, if I can say so. And yes, manufacturing is a challenging business. And all right, so there are many things that so as the company is doing today, it stands at the cusp. Can you please explain for our viewers really what Natural Capsules does? And you have given us a flavor. It makes capsules, but you make a lot of products, the sub variants of it as well. So can you please give us a flavor of it? Plus, what and how do we do as the Natural Capsules? What all we do differently compared to our competitors? And how do we see the industry evolve over the coming years and the whole value chain as such?
Yes, we are in the business of manufacturing empty capsules, both gelatin and the vegetarian variety. We make lots of variants of these capsules against specific customer requirements. Our products are basically B2B products and hence are basically inputs to pharma, finished dosage form industry. The biggest differentiator is in terms of our product is good performance of these capsules on the customer's filling machines, competitive pricing, and our quick delivery, just-in-time deliveries. So you asked about the competitors. We consider a competition against the world's largest manufacturing company called Capsugel, which is a Lonza Group company. And the second largest is another company called Qualicaps, which is a Mitsubishi Group company from Japan. And of course, the Indian company called ACG. So these are world's largest 3 manufacturing companies, capsule manufacturing companies. So empty capsule industry is basically a part of pharmaceutical value chain and is one of the most important dosage form. Capsule is a very important dosage form. Nearly 30% of the overall formulations are found to be in capsules. Capsule has a distinct advantage, technical advantage as a dosage form over vis-a-vis the other forms like tablets or the liquids, injections and all that. As you're well aware, the pharma is a sunshine industry and has always been growing. It's been growing around 7 to 9% annually if you look at last 20, 30 years. Of course, in recent decades, nutraceutical, the traditional medicine, the herbal medicines have all grown very fast, and all these industries are our big customers. Yeah.
Interesting. Now with over to you.
Thank you, Soham. First of all, a very good morning to everyone. I would also like to thank Ankit Kanodia and SmartSync Services for giving me this opportunity, and would also like to thank Mr. Mundra for taking out the time and having this conversation with us on a weekend. So I believe before taking a deeper dive into the business of natural capsule, I think it will be in the best interest of everyone to go through the basics first. So sir, if you can explain the difference between manufacturing API through synthesis route versus manufacturing APIs through a fermentation route. I mean, if you can explain in terms of the time taken to manufacture, the materials used, the cost incurred in putting up manufacturing facilities for these two, and the kind of technical know-how which is required to manufacturing APIs via both these routes, it will be very helpful, sir.
Yeah, so fermentation per se is more challenging. It's a longer duration and a costlier route as compared to chemical synthesis route. However, fermentation route provides those kind of solutions which are difficult for synthesis routes to accomplish. Fermentation is basically nothing but a microbe-mediated bioconversion of a starting material using suitable nutrients. This is how we can define the fermentation process. Fermentation, like any other science, is fast evolving, and continuous R&D is the only way to remain competitive. The technical know-how needs to be developed internally, and you have to work like walking on a treadmill in a continuous R&D to remain competitive.
That's, I think, really helpful. Now, sir, a related question to that, if we look at the history of, Indian pharmaceutical companies, we have not had, material success in manufacturing APIs using the fermentation route, be it regulatory challenges which we have had in the past, or be it the, cost competitive nature of Chinese fermentation APIs. I believe 70 odd % of fermentation APIs currently are imported from China and India. So now that the government has shown a lot of commitment through the PLI scheme, multiple companies are showing a lot of seriousness towards, putting up API manufacturing facilities through fermentation route, including us. So what are your thoughts on the future of this business, keeping in mind the history where we have struggled to manufacture APIs through fermentation, as well as keeping in mind the low cost competitive nature of China?
So it won't be wrong to, if I can say that India was ahead of China in fermentation industry right up to 1990s. I think it's post 90s Chinese entry into WTO that enabled their access to worldwide markets. And the proactive approach of the Chinese government, large-scale fermentation plants came up there, which started producing APIs at very competitive costs. The encouragement they received in form of export subsidies, the low cost of capital there, the better and common infrastructure, common effluent treatment plants, huge investments in R&D facilities from the government help these companies to outbeat many of the Indian players in those days. For example, vitamin C, the Penji plant. There were many, those companies were supported. Like Penji was basically an input material for all the penicillin-based antibiotics. And it was Government of India's proactive approach that they encouraged 4 such players back in 90s. And all those 4 players died their natural death once Chinese started dumping that. Maybe because of better technology, better output, or whatever the lower cost of production they had in those days. But now the situation is changing. Post-COVID, most of the countries out of China are realizing that import dependency for essential APIs could cause severe shortages. Like, for example, during COVID period, we had a shortage of dexamethasone, which was one of the drug prescribed for most of the patients. Prednisolone, methylprednisolone injections were prescribed. So prednisolone went short. So when they are mostly needed, and the shortages at those point of time will create problem for the local government and the citizens. So that is how they thought that these are local manufacturing should be encouraged, and they are needed. So Government of India, immediately after COVID, started announcing PLI scheme. The first PLI scheme was for bulk drugs and medical devices, announced in the March of 2020, the month in which the COVID lockdown started. First lockdown started. The incentive announced in the PLI scheme basically gives some sort of cushioning to the players selected against possible unhealthy competition. That's our thought process. Meanwhile, I would say that the cost of production for APIs in China has also been on the rise due to various factors. There are also stricter anti-pollution laws have appeared in the last 5-6 years. Most of the industrial units which were nearer to the urban areas have been asked to relocate to far-flung places, increasing manpower costs there, of course, due to a higher standard of living. So these many reasons have also increased cost of production in China. So my understanding is that the new industries coming up in India under the PLI scheme for bulk drug should do well in coming years because of the direct, indirect support from the government and assurance by government that at any point of time in future, of course, there is no written assurance, but there is a verbal assurance by the government that in case any unhealthy competition takes place for these products, the companies selected under PLI, probably government would not be found wanting in introducing anti-dumping duties, which they were a failure. I mean, they failed to do so during early 2000s and allowed the domestic fermentation-based industry to die. Yes.
Thank you. Thank you for such a detailed answer, touching upon history as well as the situation in China and the outlook for Indian fermentation-based API manufacturers. Over to you, Swam.
Uh, Thank you, Mundraji, and thank you, Navid. You mentioned briefly about that fermentation is a more challenging process, but we have still gone ahead with fermentation. Is it because the margins are better? The long run full capacity utilization margins are better?
No, our basic intention was to do a backward integration. See, when we started initially exploring the possibility of putting up a steroidal API derivative units, we found that the margins were limited. There were already 5, 6 entrenched players in the Indian scenario. So when we started digging deeper, we found connects in the fermentation industry, and that gave us encouragement that we should also do backward integration. Of course, fermentation industry in India was most of the people were not looking favorably because of the past experience. So, but we chose thinking that we have right people on our hand, and then we started working on the R&D for those products, and that's how we got confidence to start the fermentation project.
Thank you. So I'll just pivot back to capsule business. I think the common theme of our questions is Navid is focusing more on the API side, and I'll focus more on the capsule side so that we can cover
Sure.
the entire thing. So there can be a back and forth of the themes. So I hope that's okay with you.
Yeah, it's okay.
So would you be able to give us any color on the blended price realizations that we experience per thousand or per million capsules that natural capsule portfolio enjoys on a blended basis?
See, we are into both domestic and export markets. We do have a significant amount of our business, about roughly around quarter of our revenue comes from export business. So we currently have a blended realization of around 108 rupees to 110 rupees per 1,000 capsules. The realization on export sales is higher by around 15 to 17% as compared to domestic sales. At the same time, I would like to emphasize that sales realizations or margins might vary due to business dynamics, but strong foundations of a business makes it sustainable over a longer period.
Thank you. We are also putting and establishing new lines of HPMC, and it seems that the company is going full blast ahead on the vegetarian capsules segment. So, how is our product mix? How does our product mix look today? And how is it slated to evolve in the coming years? And what will it affect? How will it affect our price realizations?
Presently, we are 95% of revenue comes out of gelatin capsules and balance from alternative forms of capsules like vegetarian and other value-added capsules. Going forward, we will see change in product mix as we are putting up new lines of vegetarian capsules, dedicated lines. We anticipate that share of vegetarian capsules will go up from current levels to high teens, maybe around 15 to 17% in next couple of years. This would also help us to increase our blended realization and better margins.
I see. And what kind of say, for example, in 2030, how does the operating margins look like?
2030 is a very long scenario.
All right, 2026 perhaps.
But see, our current EBITDA margins are around
20%. Yeah. Okay.
So post probably vegetarian capsules taking a higher share, this can increase by at least about 3 to 4%.
I see. So about 25 to 27%?
Yeah, so 23 to 25% to be
25%.
more effective.
Thank you. Yeah, Navid. Over to you.
Yeah, so now that we have discussed about the product mix as well as we have touched on the margins, which we are currently clocking and we are expected to clock, given the expansion which are in the pipeline. So I would like to discuss a bit about the current environment which is prevailing. So I think all of us are aware that most of the pharmaceutical companies who are like the end user of our products are struggling with business growth as well as are struggling with margins. In this kind of environment, natural capsules have managed to grow their business as well as we have managed to maintain our margins well. So, just want to get your thoughts, sir, on what has kept us immune in this kind of a difficult environment for the end user industry. So, if you can give an explanation there.
Yeah, I would say domestic pharma had a very good run for last 2, 3 years and are now currently facing some sort of a slowdown due to various reasons. I think major ones are, of course, the slowdown post-COVID. During COVID period, the industry grew by, I think, 15, 16% over the last couple of years. So slowdown has happened post that because you are growing on the back of a higher base number. Then the inventory pileups have been there because during the COVID period, due to disruption in supply chain, most of the pharma companies have stocked their raw material, increased their work in process, increased their finished goods inventory. Even the trade also had piled up a lot of inventory. Then, of course, another major reason, according to me, is the slowing exports, especially to the third world countries and the middle income countries, emerging markets, and due to majorly due to the currency issues, which are we can see a lot of currency upheaval in markets like Brazil, Egypt. You can see Nigeria, Ghana, and all those sorts of countries. Currencies devaluations have a big impact. However, our company has been following a very cautious approach since last many years. During the COVID period, when the demand was good, also we were focused towards balancing between domestic and international customer. Uh, During that period, also international demand was pretty good because of the disruption of supply chain from China, and also the demand was very good in domestic market. So we did focus on some of the large domestic customers who have volume business. So this strategy has been giving us good support and consistent results in form of volume and value.
Right, right. So, focus on the right kind of business is something which is keeping us ahead of the industry at this point in time, is something which one should understand.
Yes.
Yes, please go ahead.
Speaking on the right kind of business, so our natural capsules is betting big on the nutraceutical demand trend that has caught people's attention to continue and continue for long. However, on the other hand, a lot of companies in the capsule business, much smaller than you as well as the bigger ones than you, are also putting up a lot of new capacity. So, is there a chance of overcapacity in this segment?
Yes, it's a natural phenomena that whenever the demand is good, most of the industry players undertake expansion. So in our empty capsule industry also, most of the players did expand. Some did big bang expansion, some did limited expansion. In last 3 years, we have seen expansion by pretty much all the players. Even though a part of this capacity might seem excess at this moment, but my belief is that it will eventually get absorbed in next 2 years, 3 years, as there is a regular growth in consumption. Pharma business, as I mentioned earlier, is a continuously growing business. So apart from pharma, you have Nutra, you have herbal, traditional medicine, which the empty capsule industry caters to. And therefore, the demand has always been growing over the years. So I find that whatever excess capacity which seems at this moment will get absorbed over next 2, 3 years.
One of your competitors is also specializes in giving the filling machines to the clients. Does Natural Capsules also do the same? And if not, does that impact the kind of relationships we have with our clients?
See, I believe that every strategy has its own advantage and disadvantage. We do not follow that strategy. Customer who take on lease these kind of machines will have to get into some kind of a long-term tie-ups, and those kind tie-ups both on the terms of pricing and volumes. Sometimes they'll find constraint themselves for timely supplies also. So I think it's a kind of a mixed bag for the customer. At present, we are not having any plans to make such a strategy, but however, we do not rule out introducing such a scheme in future.
Now, with all yours.
Sure. So, sir, continuing upon competition for some more time. So, sir, our unlisted competition with the largest market share domestically is clocking better margins than we are doing currently. And so, sir, want to understand what are they doing differently which helps them command a better margin than us? Are they technically better placed than we are? Do they possess better technology? I mean, or they are associated with some different kind of clientele which is helping them to do this kind of margins? An explanation there will be helpful, sir.
So the competition which you are referring to is a very old, well-entrenched player in existence for more than 60 years. I think they have first mover advantage by being the first supplier, and in many cases, the only supplier to most of the pharma companies which export to these regulated markets, and they derive much better margins on that business. Of course, the technologically wise, the latest machines that we have introduced, 5 million capsules producing per day machine, is superior than what kind of machines they have. But I would, as I mentioned earlier, the advantage of being entrenched player in the pharma companies which export to regulated markets, get them better margins.
Okay, so are we also trying to follow their footsteps? Are we, trying to enter into those kind of regulated markets which they are currently working into, which can help us, catch up with them in terms of margins? Do we have any sort of plans, and what are we currently doing there, sir?
Yes, that's a very logical part to follow, but that's a difficult part to follow because most of these pharma companies who have already filed their dossiers and their products are existing in these regulated markets, they generally would not want to change until unless there's a big impact. And capsule per se is a very least expensive product in the whole finished formulation. So most of the companies do not intend to change a formulation just because they get 10-20% advantage in price of capsules. So our strategy for last many years now, 4-5 years, been that we request our customers to, whatever the new products they introduce, to take our capsules and check their stability with our capsules of their API and then introduce. So we have been successful in enlisting such a customer base, and that's growing. I would say that's growing, and over a period of time, we should be also able to increase our share of such customer.
Sure, sir. Sure. Thank you for that detailed answer. So, sir, in your opening remarks, you mentioned that we have been pioneers in the HPMC, which is the vegetarian capsule. I think we launched it in 2000 or something. But if I look at the history, the business has not, done as good as one would expect, given the first mover advantage that we had. So now that we are incurring capex in this, line of business, as well as I think competition is also doing the same. So if you can give some understanding on what is triggering this kind of change and how should the future look like for HPMC?
So we had introduced this vegetarian capsule back in 2002, whereas the next player in Indian market came much later in 2007 or so, I would think. Our smaller size, our company at that point of time, we just had about 3 lines and revenues in the range of 15-18 crores. That was a big constraint on our going full hog to promote these capsules in domestic as well as export market. Our exports were also limited, and therefore, and in domestic Indian market, the demand did not pick up beyond. Actually, the HPMC capsules came into demand in 1999 when the government of that day brought some regulatory changes on nutraceuticals having green dot, brown dot. And then when the government changed in 2004, such regulations were withdrawn. So because of that, the demand went down drastically. And then the leftover players, it was by choice that they were to promote these or not. So demand, of course, lasted in international market. There was much bigger demand, but we didn't have much big export footprint. So that's how we were pretty slow in developing our HPMC capsule business. It took a lot of time to adopt. Domestic players have taken time, but going forward over a period of last 10 years, I find that number of Ayurvedic companies and subsequently nutraceutical companies, they have launched these capsule variants in HPMC capsule. Of course, government back in current government, when it came in 2016, suddenly brought a notification saying that all capsules, there was a proposal before the ministry that they want to convert the whole gelatin into HPMC capsule. But then the whole pharma industry got up and protested, saying that can't be done. That would lead to a lot of cows because of the stability issues. And so the government relented and they allowed it, saying that. Definitely there is a trend in pharma companies also that any new product, they examine HPMC capsule. So over these years, the consumption of HPMC capsule has also increased in the wellness products in India, where the market for these wellness products also have increased. So demand for HPMC capsule has been increasing in India also. Of course, in Western countries, a significant change in the pattern of demand has happened, especially in nutraceutical. I would say from say 10% market back in 2000, 2002, today it is, I would say 75, 25. 75% is HPMC capsule market, 25 is gelatin capsule. So we are now banking on these kind of markets, and therefore we will definitely be looking at expanding our capacity, which will increase our share by selling these to both the domestic and export markets.
So, just out of curiosity, sir, what will be the mix of the domestic market, as you mentioned, for the international market currently?
For our upcoming HPMC capacity?
HPMC versus the gelatin-based capsules.
You
Any
mean
number if you can give?
India? In India?
Yeah,
In the Indian market, I would say roughly around the demand for total capsule could be about 60 to 70 billion capsules, of which probably around 10 billion is 8 to 10 billion is vegetarian capsules.
Got it, got it. And so again, last part on this. So do you see existing drugs which are getting delivered into gelatin-based capsule over a period of time getting converted into HPMC, or the HPMC growth will only come from the newer drugs which are going to be introduced?
So definitely post this 2016 government nudging, I think most of the companies have realized that ultimately the government, if they continue to persist on this input pressure, many of the companies are evaluating parallelly and changing the forms, new products are being introduced at HPMC, and many of the existing products where the cost permit, they are trying to evaluate the stability of the product with these HPMC capsules.
Perfect, perfect. Thank you, sir. Thank you for such detailed answers. Over to you, sir.
Mundaji, thank you again. But I just wanted to ask you about because we are kind of going deeper into the competitive aspect of it as well, and the capacity aspect that you talked about. So I just wanted to ask you that given given that everyone is actually expanding their capacity, but I presume that their capacity expansion is not correlated with the kind of innovation that Natural Capsules is experiencing, where it has been able to bring down its reject ratio from 8% to 3%, bring down its power consumption levels, employee cost levels, and all those things. So in any consequent down cycle of that may follow in the next few years, because of oversupply, will it be fair to assume that the wrong economics will come back to haunt the players who have not really done their homework well?
Yes, it will be right to assume so. Yes.
I see. Coming back to these numbers, I'm also curious, and we have been talking about margins quite a bit. So I am also curious about one particular number that has come up in last quarter's financial results. So your receivables have gone up, almost doubled, from 20 odd crores per quarter to 43 odd crores. Any particular reason that we should understand? How should we really appreciate this number better?
Yeah, I think the numbers have not suddenly gone up in one quarter. It's over last 3-4 quarters. There are two reasons. One, of course, the volumes are going up. In the quarters where we were doing about 30-35 crores of quarterly revenue, the numbers were less, and now we are doing maybe about 40-50% higher. So that's why receivables have gone high. Secondly, of course, the receivable in terms of number of days have gone up. This is a very common phenomena which has been noticed across pharma industry now, mainly because of the tightening of the liquidity by the banks, and there is a slowdown in the realization at the retail level from the companies, and the companies have been making slow payments. But I think this is manageable, and we are able to regulate this within our working capital cycle.
Got it. And what kind of a working capital cycle that you are targeting, at least when everything stabilizes? Because Natural Capsules is undergoing humongous changes inside. At least on the capsule business, when everything settles down, what kind of a target operating model that you are aiming for?
Your question is pertaining to the working capital cycle, receivables?
That's right.
Yeah,
that's right.
So receivables in pharma industry were always upwards of 90 days earlier. It was only during COVID period that we were able to bring it down to 60 days. So sometime in 21, 22 and all that, we were working with about 60-day cycle sharp. Now again, it is slowly going back to 90 to 120 days. I think if you look at the past 5 or 7 years, it was always the case.
Okay.
So we have factored in that kind of receivable cycle.
So 90 days about.
Yes.
Thank you. So qualitatively, and we have talked about the intermediate term, but qualitatively about in the next 7 years, and I know you mentioned that 2030 is a long way, to come. But qualitatively, how do you see Natural Capsules at? Where do you see with respect to what it is today? So we began the questionnaire with your history. So I'm asking you to basically look ahead and kind of paint us a picture. What should we expect?
I believe that in the long run, any business can grow sustainably if it has a competitive advantage over other players, which we believe we have. Our company has potential to grow capsule business on the strength of the better technology, better quality of product, footprints across other geographies. I think that should help our capsule business to grow sustainably. Same way, the API business will also grow by adding, as we are launching with the base APIs initially backed by this PLI. Because even without taking PLI support, I think our approach would be to add value-added APIs, new dosage forms of these APIs. Then our idea is that post the corticosteroid, stabilizing the corticosteroid API project, we would get into hormonal API segment over next 5 to 7 years, and that is that would give us an advantage of being a fully integrated plant. So by doing so, we'll be creating a significant value and growth opportunities for all the stakeholders, and maybe over a period of time, these values will get unlocked over the coming years.
I see. Will it be fair to assume that Natural Capsules will evolve from a capsule business with an API lab to an API business with a capsule side business?
Yeah, it's anybody's guess, but I believe both the businesses will run parallelly well, and we are on growth path in both the businesses, and we are focused towards more R&D and more innovation, and therefore both the business will do well. Over a period of time, I believe the subsidiary companies will get carved out and maybe get listed separately. I don't know. These are the futuristic ideas, but our fundamental aim would be to increase the value for the stakeholders, and to unlock that, we might go and list the API business separately as well.
What can stop you from achieving this dream? I mean, what keeps you awake at night?
So I'm an optimist. Always believe that if you have a clear vision and growth path, you will achieve it despite all the hiccups here and there.
Thank you, sir. Thank you. All the very best. Navid, over to you.
Thank you.
So now I think I would like to discuss on the capex aspect. So I'm sure most of our viewers would be aware of the fact that we are incurring a capex in the API segment, and also will be aware of the fact that we are approved under the PLI scheme. So I have a two-part question here. A, sir, if you can give numbers on what is the quantum of the capex which we are incurring, and what kind of incentives are we expected to receive under the PLI scheme, and when can we expect this facility to come live?
Okay, so on your first question on the capex, this current project is now supposed to have the asset investments of about 130 odd crores. Of course, with the GST, current assets also getting blocked, cash flow requirement will be in the range of about 150 crores to start with. And with that, we'll be covering the full scope of the project. And of course, talking about the PLI scheme, so in this 2020 PLI scheme of bulk drugs and medical devices, there was a category called fermentation-based KSM and API category. There were four major conditions were placed by the government. They were committed investment, committed capacity, commitment on the price, only for the purpose of incentive eligibility, of course. And the last condition was the DVA, domestic value addition, not less than 90%. So we have fulfilled the investment criteria so far. And once we start producing, probably we will meet the capacity and of course we'll be eligible for incentives on the committed price. So keeping in mind these factors, so we actually the scheme envisaged starting the incentive scheme from 1/4/24 or 1/4/23, but for fermentation-based API, since they have longer gestation period, government has given 1 year grace period. So we are allowed to start the incentive scheme come into force from 1/4/24. So our plan is to pick up the incentive scheme starting 1/4/24, and the scheme will be valid, is applicable for a period of 6 years. So over the period of 6 years, we will be eligible for, as per the calculations, what we have mentioned, is about 67 crores.
That's really helpful. That's quite detailed. So in the pre-capex requirement, we just had to fulfill the capital commitment requirement, and now we have to fulfill the other three requirements. Is that the understanding?
Right.
Okay. Yeah. Yes, sir. Please go ahead.
No, I'm done. I think I'll pass on to Ankit for the audience questions.
Soham and Navid, I can see one question by Rohit. Others can also ask your questions. Maybe you can raise your hand or you can type in on the chat box, whatever suits you. Sunilji, Rohit, one of our Mission Smile member, he asks this question. If you can talk about the competitive advantage which we have with regards to these three API molecules. What are barriers of entry for other Indian players to get into these APIs? And also, do we see any alternates which are currently available or is in development stage, which can structurally impact demand of these APIs?
Okay, to answer your last question first, alternative to steroids, at this moment, there are no alternative APIs to steroids. Steroids are the APIs of the last resort. The doctors prescribe steroids when other drugs don't work, or rather they give in conjunction with other drugs to make the effectiveness of the other drug to make that more effective. So now talking about the competitive advantage of these three APIs that we will enjoy, of course, apart from PLI, the fact that we are going to do the full scale backward integration, starting with the base material which is available in India and doing all the steps in integrated facility will definitely give us an advantage in terms of pricing. I would say more than the pricing cost, it is to do with the better customer base. I would say the companies, customers are right now really perturbed about the disturbance in supply chain from China. So the companies of likes of Cipla or Lupin, who are large consumers of steroidal APIs, they are now looking at alternative sources where probably they can tie up for a price, say maybe for a year or so, or for a quantity which can be consistently be supplied. So we are in a position to do that. So I would say the margins will come with the improved the portfolio of customers with a higher I mean, their capacity to pay better pricing on those kind of products, and of course, over a period of time, we would want the project to go on some sort of a regulated audit and target export markets. So now the another question was about what are the entry barriers. I would say the intricate technology, the long chain of synthesis, the fact that it is a sandwich process. Starts with fermentation, then 8 steps of synthesis, followed by another round of fermentation, then followed by another 3 or 4 rounds of synthesis. It's a sandwich process with the double dose of fermentation. So it's a bit of a tricky synthesis process and manufacturing process. I think for someone to copy that would take, again, maybe it's not that difficult or not impossible, I would say so. But it'll also take them maybe 3 years, 4 years, or 5 years, as we have taken. And by that time, we would have, would have got to entrench ourselves with the kind of customers that would be our long-term revenue streams.
Got it. So moving on to another question I've received just from Mr. Atul Rawalji, who is a very good micro cap investor for last 3 decades, and we are happy and fortunate to have him as our Mission Smile member. So he is asking if you see any major challenges in going from relatively simple technicalities of capsules to complexities of API manufacturing. So transitioning from capsules to API, do you see any major challenge in that? Or do you think it is par for the course?
To answer that, I think we have completely separate teams to take care of both the projects. We have a completely professional management CEO taking care of the capsule business, and for API business, we have brought together a team of professionals who were having very long experience of steroidal API chemistry, the fermentation, commercial scale fermentation experience, having done so for about 9 to 10 years in China. So I don't find any kind of a major challenge in implementing the project, because we have brought in the right kind of people, right kind of technologies, and right resources. The management level, I think all businesses do require similar strategies for business success.
So thank you so much for your answer, Sunilji. And one of our participants, Mr. Mahavir, he asks about an interesting question about the key man risk, as in if you can share more about the management bandwidth, because specifically in cases of companies of your size, what happens is that we don't have any con calls, we don't have any, even in the annual reports, the materials is not, we can't see the management out of. So if you can share something about the management bandwidth, that would be great to know.
So as I mentioned in my last answer, that we have professionalized the management at both the capsule level and the API level. In the API especially, we have brought in ESOP scheme, and we have retained these people who have brought in technical inputs and are the support pillars for this R&D effort for long-term ESOPs, and have tied them for a longer period of duration. So I think we don't foresee any challenge on that kind of thing. And even otherwise also, the intricate nature of technology, it's a long chain. It's not that easy to cut, paste, copy, and even if the people move from one place to another, it's not that easy. So that's what my personal feel is over a period of last 5 years, which I've been seeing.
Right. So the next question is from Abhinav. He asks, is the raw material for vegetarian capsules locally sourced or it's imported?
No, vegetarian capsules raw material is a product called HPMC, hydroxypropyl methyl cellulose. Is a derivative of cellulose, which comes from pine wood or cotton. India doesn't manufacture this product. We have to import it.
Pine wood, I would suppose then it would be basically from New Zealand, Australia.
Yeah, of course, there are large players of HPMC. Of course, till about 2005, there were only two large groups like Dow was there, and then there was Shinetsu in Japan, which was there, and the Korean company Samsung was there. Now many of these, Samsung has changed hands. It's with Lotte Group now. And there were a number of players in China which have come up. Of course, those days also Chinese HPMC was available. The quality was not consistent, so we never tried Chinese HPMC in those days. But I believe the Chinese quality of HPMC has improved now, and there are multiple options for us to explore those raw materials.
A slight detour, but just wanted to understand, it comes from pine wood. That is what you mentioned, right?
The base raw material is pine wood. Pine wood converted into wood pulp. Wood pulp is converted into cellulose. Then cellulose is further chemically treated to make it the desired product, HPMC.
As far as I understand, there is a large amount of pine wood import happening in the country for last, say, 10, 12 years now. In fact, more than that. And the volumes are only increasing. So do you see any Indian player also slowly coming up in this space?
See, my understanding is that, just a minute. My understanding is that pine wood, it's a HPMC. What we use for capsule manufacturing or a pharma is a very, very small portion of the total output of that plant. So I would say Dow has got some plant in US which manufactures something like 50,000 tons, out of which the pharma grade will be some 2,000 tons. So for somebody to put up HPMC plant in India for manufacturing the capsule grade of HPMC or a pharmaceutical grade of HPMC for tablet coating from pine wood will be very difficult. What might happen is they might buy some intermediate from some of these companies from China or Korea, and then do maybe 2-3 stages of manufacturing to make them to the desired product.
Got it. Yeah, that was very helpful. So next question is from Mr. Gopi. Please find out what is the margin profile of Gopi. I can probably unmute you if you can ask that question yourself, because I couldn't understand your question. I've unmuted you. Can you ask that question, Gopi? Okay, no problem. So moving on to the next question. So Amar asks, when venturing into APIs, what are raw materials for our APIs? Are they imported from countries like China or others? What's the dependency here? And can this be a bottleneck when current global supply chain upheaval may happen or is going under the way?
So as I already mentioned, the API project that we are putting up is a fully integrated facility, starting with the base material, which is available in India in abundant quantities. Our main raw material is a product called phytosterol, which is manufactured in India and being exported to China at this point. So in the long run, when we are fully integrated manufacturer, maybe initially we might start with importing few of the intermediates to start with. But as we establish the complete chain, we'll be totally free from any dependency on imports.
Sure. So Biman asks, what is the sense you are getting from your global customers regarding any timeline when you can see anything tangible in your business like orders, etc., because of the China plus one thinking?
You're referring to APIs?
Yes, I think he's referring to APIs only. Yes.
As I think in one of the earlier calls, I had mentioned that most of the countries, even the regulated market countries like the US or Europe or Japan for that matter, are very, very curious and very anxious to have China plus one supply. Most of them worldwide, the steroid manufacturing has now been relegated to only N-2 to N-1 stage manufacturing. Nobody is doing, not even the original innovators in US or in Europe. So therefore, most of them are now threatened by this disruption from China, and everybody is looking at it. In fact, we had LOIs in our hand. A few of the Japanese companies, of course, to export to Japan, it will be a very long time-taking process of 3 years at least. So the companies are keen to take them in chemical name and do the processing at their end. I mean, so we find that there is a bit of interest, very good interest at that level.
Sure. So Som, you have raised your hand. You wanted to ask something?
Yeah, so I can ask it after the audience, or I can take it now.
Yeah, you can take it now. No
All
problem.
right. So, sir, because I was curious while we were discussing about it. So, what kind of a margins we are expecting from the API business? Number one, which molecule will go first in production at the first year? And the third thing is, in your own calls with, I think, a prominent institutional researcher, that interview is also there on YouTube. You mentioned that in the first half of the year, you will be you're expecting about 1x the asset turns, and then by the close of the year, you will be expecting about probably 1.8x to 2x asset turn. Now, this asset turn, is it based on the entire 114 crores capex, or only the single line that has gone live?
Okay, now you have asked multiple questions now.
Yeah,
API
sorry for that.
margins, okay. API margins depends on, as I mentioned, really on the based on the type of customer to whom you're selling. Okay, say for domestic market, the industry can get in about 10 to 12% EBITDA margin.
Okay.
Same product, if I'm able to sell to a kind of a manufacturer who is importing right now from China derivative products and selling it to a finished product into US market, probably it could be 15 to 18% because I get into their dossier and then it's a long-term arrangement, probably better pricing. Then if I'm able to supply to ROW markets, again, it will be about 15% kind of a margin. If I'm able to export to reg markets like US, Japan, it could be anything around 25 to 27%. So the API margins are basically a factor of the customer, nature of customer. Now, you said the first molecule which we are going in the year one is our first launch would be hydrocortisone prednisolone. Prednisolone is again one step fermentation from hydrocortisone. Hydrocortisone was not covered under the PLI scheme, but there's a huge market demand for hydrocortisone, its derivative also. Initially, since we are keeping out of the PLI for the first year, we probably will market hydrocortisone, its derivatives, and prednisolone and derivatives. The next introduction would be on dexamethasone and betamethasone, for which also we have covered most of the steps in our R&D. Now, talking about the revenue, you were referring to my interview with last year, July, I think you're referring to.
Yeah.
So yes, the project is going in two phases. In the first phase, we are putting 50% capacity by putting 2 trains of 1 kL, 10 kL, and 60 kL fermenters. With a gap of 6 months, we are putting another 2 trains of 1 kL, 10 kL, and 60 kL fermenters. This was done with an idea that in case we find something challenging or something improvement needs to be done in the design of the fermenters, probably we'll have the option to do so. That's the reason we split into 2 parts. Yes, of course the project has been delayed. The last year when we were talking to I think the interviewer, I was keeping in mind that by end of March we would be done with the validation exercise. Now probably this will spill over to end of April or May, and so the number of months on the current year would be less. So we are still hopeful of a one-time asset turn for the whole year as such. It will all depend on when the second phase come on board, and that is why we at this moment we can say one-time asset turn.
Okay, so this asset turn will be on the line, on the capacity that is installed, that is the asset that is installed, or the entire on the entire capex. Yeah.
So here we are following a slightly dual strategy of initially launching with intermediates being imported from China and started marketing them, and going forward integrating backward towards right up to the base level. So this would be a combination of all this.
Okay, so the asset turn will be, so for example, if we are aiming for a 1x asset turn, so it will be about 114 crores by the end of the year.
Should be, yes.
Okay, thank you.
Thank you, Sonam. Sunil ji, the next question is from Dr. Vimal Agarwal. And I think he has also been following your business for a long time. He's based out of Surat. He asks, what is the market of vegan capsule and their realization?
Yes, the vegan capsule is the vegetarian capsules, the HPMC capsules or cellulose capsules, you call them. As I already mentioned in an earlier question, answer to an earlier question, was that in India, out of about total market of about 60-70 billion capsules, about 10 billion capsule is the market for vegan capsules, which is roughly around, say, 10-15% of the market, 14-15%, I'd say. But international level, the market is much higher for nutraceuticals. In nutraceutical markets, if you look at the US market or Europe market, it will be as high as 75%.
Thank you. So the next question is from, just a second, Pallab. So Pallab asks, what kind of fermentation tech is being employed? Is it batch mode, fed batch mode, or continuous mode?
Of course, it is batch mode.
There is one more. Abhinav asked, what is the expected timeline for productionalizing all three APIs? Will we launch all three molecules in next few quarters, or will this be done in a phased manner?
As I already mentioned, we will be doing in a phased manner. The first phase would consist of hydrocortisone and prednisolone. These are two major APIs that would be launching and their derivatives in first 6 months. Going forward in the second half of the year, probably we would be launching dexamethasone and betamethasone. I think betamethasone would be the first one on the line, and ultimately dexamethasone. So probably at this point of time, we are sure of the first 2 or 3 quarters of hydrocortisone and prednisolone. Either the last quarter or the first quarter of the next year, dexamethasone, betamethasone would be launched in the large scale production.
Yeah, Navid, I've unmuted you. You may ask your questions.
Yeah, so sir, you in the last answer you mentioned about nutraceuticals, and my belief is that nutraceuticals in India have not picked up the way it has picked up in Western countries. Maybe that has to do something with the acceptance of, or maybe that has to do something with the Indian mindset. So, what is, in your opinion, the progress on this front? I mean, are things changing there, and how can the future look like for nutraceuticals in India? And I believe that will indirectly benefit us a lot.
See, there is a slight misconception here. In India, nutraceuticals, most of the nutraceuticals are covered under drug definition. For example, vitamins. In US, vitamins are all nutraceuticals, whereas in India, all vitamins are under drug. Basically, to keep the check on the pricing. Okay, so consumption of nutraceuticals is also significantly big in India. Now, this online marketing and all that are all increasing. Apart from nutraceutical, I would say a lot of consumption of herbal medicine, Ayurvedic, traditional medicines, all are increasing. And I think the cumulative impact of all these in terms of nutraceutical onto the vegetarian capsules is pretty significant. For example, I will tell you Patanjali. Patanjali has got a few products which sell huge quantity of vegetarian capsules. One product itself, something like, I would say, one range of product, I would say, nearly 10 million capsules a month.
That's interesting.
Yeah.
Great. So, Sunilji, I had one question from my side also. So, as an MD of the company, and you have been there since the inception, how has been what is your view on capital allocation and how it has changed over the years? How do you look at capital allocation? Because at the end of the day, be it marketing, be it operation, the first job of an MD or a CEO is always allocating capital in the right way. So how have your views evolved over time on that? That would be great to know.
Yeah, that's a very pertinent question. The views have evolved over a period of time. Initially, when we started the project, of course, it was to complete the project, then run the project, make it viable project. Over a period of time, our focus shifted to research and development, R&D, creating something new, innovative. So that we have last at least about 10 to 15 years, right from the year 2009, I would say we focus. Why not 2009? 2002, we did vegetarian capsule R&D. We spent a lot of money, though it was beyond our pocket. That means those days we spent a lot of money, time, effort in introducing those capsules and launch them. And back in 2009-10, we improvised our capsule manufacturing machines. Our funda was to tell you in hindsight, if you look at it back in 1995 when we launched our first project, when we came out with the product in the market, we realized that the asset turn was very poor. It was one time the asset turn in those days, and we had started a very small project of say about 6.5 crores, and the revenue in the first year was about just like 7 crores. So then onwards, we started thinking on that, how do we expand also, but keeping in mind the capital costs. So we took a deliberate strategy of buying out used machine over a period of time. Since then, we never bought a new machine till about 2018. So all these were used machines which were improvised and upgraded to higher capacity. The machines which are making 1 million capsules per day were upgraded to 1.5 million capacity in the year 2011, 12, 13. So we converted 4 such machines with internal resources, with external inputs from some consultant. Then in 2018, we with an external integrator, a automation company, we launched a machine which produced 2.5 million capsules. So that was also our focus on R&D, and that the confidence of that success of that machine made us to put in more money to come out with a 5 million capsule machine. So I would say the focus changed over a period of time, and now the current focus is on R&D. The API also, I believe that most of the API companies if they have to survive, they have to be on a treadmill of R&D. R&D pipeline has to be good, because all the serious players across the world are working on research of the same products. So they improve their yield, they reduce their impurities, they reduce their batch cycle time, thereby reducing the cost. There could be disruption over a period of time, some synthesis routes switching over to fermentation technology, thereby significantly bringing down the cost of production. So you have to be aware of all these kind of challenges in the market place, and must always be on the guard, and R&D should be your focus area for capital allocation.
That was really helpful. So I think you wanted to add something here or ask something?
Yeah, I just had a follow-up question to this. You mentioned R&D. So as the API line gets stabilized, and even now your R&D expenses have kind of come down, primarily because your revenue has also gone up. Now, do we still see again a spike in the R&D expenses, and you planning to keep it at 2.5% of revenue, or do you plan to basically accelerate it even further in the coming years?
I think R&D is going to be a continuous affair, and over a period of time it will go up also. With the new commercial facility right now, R&D center is having constraints of space and the resource equipment. With the new R&D center coming up in the new facility, we are going to increase the number of people working in the R&D, and our focus will be there. I believe R&D is the way forward, and R&D by means, not only, as I mentioned, within the same product range, maybe a light product range, new product range, those products which are going off patent, then new dosage forms, probably new types of molecules of the same, new forms of the same molecule, probably those also going to bring in better returns. So I think As you rightly pointed out, 2.5% is our current spend, but over a period of time, it is going to be even higher.
I see. What kind of a number? If you can general, like if you can give me 80% understanding of that.
Come again, please. I missed your
So
question.
if you can give us an understanding of what kind of a percentage of revenue we are looking at in the foreseeable future.
I think it'll be difficult to judge a percentage, but I can definitely tell you that our focus is on R&D. Probably it'll be upwards of 3 to 4%.
Also, right. Thank you.
Thank you. Thank you, Som, and thank you, Sunilji. So, Sunilji, my next question would be, so you are after all a capitalist, right? And a capitalist will always look for growth because ultimately long-lasting value only gets created by sustainable growth. If a company stops growing, nobody values that company. Now, growth is a very tricky word. So we have two different people, kinds of entrepreneurs at different end of the spectrum. At one end, we'll find entrepreneurs who will say that I will be very cautious, I will never take debt, I'll never dilute equity. And then there are, on the other end, you will have entrepreneurs who have actually loaded up by taking excessive debt and excessively diluting their equity over a period of time. What has been your thoughts? Where will you lie in that spectrum?
We were not averse to taking debt. We were always a cautious borrower. So in the earlier years, we borrowed only when it was necessary, and we found that it will be a good value proposition to invest that money. So during 2010 also, we took a lot of debt, and then we expanded our Pondicherry facility, upgraded that. So now in the current last 2-3 years, we have again taken a lot of debt on the back of current innovation that is driving our growth. We've expanded aggressively on the capsule arena, thinking that this is the way forward, and the current level of technology what we are having has a competitive advantage, will outbeat the competition in coming years, and therefore we are aggressively betting on that. The same way on the API, of course, initially before PLI, our project cost was smaller. We were to borrow on a smaller level, but when PLI scheme came, we increased our capacities, and then, of course, the focus also was that we want to make the project compliant with the US FDA requirement right from day one. So that increased the cost of the project a bit, and therefore, of course, for that matter, we have balanced borrowing by raising a equity through right issue. We might be able to raise some more funds for the subsidiary company in coming months. So we always believe that growth should be an ongoing exercise, and it should come with the responsible behavior. I also believe somewhere I've said our environment and social goals also should be kept in mind while growing, and governance regulations and all that we must follow. So, of course, to answer your question was that the debt will be taken as and when found necessary, and there is a value proposition in investment.
That was really helpful, very helpful. Thank you so much. And I think Abhinav in the chat has asked a related question. Are there any plans to raise capital for natural biogenics through equity?
Yes, there could be in the project. As the project costs got escalated a bit, as I mentioned, due to 2-3 reasons: capacity expansion, the making the plant compliant with FDA requirements from the day one, and then also some of the cost escalations during the war last year. So probably yes, there would be need for raising equity, which we did some time back also, partially, but we placed them at a right entry price. Yeah.
Right. And sir, I see another question from Hemant. The new machines we developed for capsules, do we hold any patents for them?
So these machines were developed in collaboration with the partner who holds the patent. Our understanding with them is we are exclusively their customer for these 5 million machines. Of course, they did sell 3.2 million capsule machines to other customers. So we don't hold any patent, but they do have.
Any other question on the chat box? I'll ask another question, Sunilji. This is probably not directly to your business, but which is very important for us as investors to analyze companies like Natural Capsules is, how do you look at culture is a word which cannot be seen in an annual report probably or numbers, right? It is basically only felt when you talk to people in the company. Or so how do you see as culture, how important is culture for you in scaling up Natural Capsule, and how you used to view culture, say 10 years, 15 years back when you were a tiny company then, and today you have grown to a certain level, and probably next 5 years you'll scale to another level altogether. So how do you see culture as a part of this growth?
As I already mentioned, it is about the approach that the group takes. So we are forward-looking management. Board of directors have always been persuasive of the fact that we must grow the company, we must grow on the lines and capitalize on whatever positives are. So I think going forward, or if you compare it to the past 8 or 10 years, yes, it was a cautious approach those days. Our culture was to be very cautious, invest only if needed and all that. But now that things have changed, we have seen our scales have become different. We are looking at new API project as one of the springboard mechanism where we would find ourselves in a kind of a scenario where probably it will take us into the next line of expansion in API, maybe going forward in about 7 to 10 years, getting into some kind of a dosage form to tie up with some rec customers. We are looking in a very positive frame of mind.
Okay. Soham, I think you have a question.
Yeah. So you mentioned about DSDS Robotics holding the patent. Sorry. So I was curious that what prevents them from not going forward and basically, selling the 5 million capsules per day design to anyone else.
No, as I mentioned, we have an MOU with them for at the moment that as long as we keep buying that 5 million machine, they won't sell to others, number one. Secondly, I would say that it is not only the machine which makes the project successful. He has gone and sold 3.2 million to a couple of other companies, which are also not different from the other companies with the older technology. So it is not only the machine which makes a company successful. It is the culture of the management, the culture about the quality, the systems in that customer base, and it's a whole holistic view you have to take. So I feel that going forward also we should continue to have that kind of competitive advantage.
And now that you're moving into 7.5 million capsules per day, kind of a capacity, so or another kind of a line. So are you estimating further increase or improvement in the efficiency and the requisite costs?
So let me correct you. We are not having any immediate plans of launching 7.5 million. What I'd said in an earlier interview was that we were examining the prototypes of 7.5 million capsules. And I'm happy to inform you that we have done a successful trial with this, in collaboration with the same company. Now, the question is whether to introduce them here in India or not more of a strategic decision, because Indian market requires a mix of large batches and small batches. So which we think that these 7.5 million machines are not that economical or viable at this moment. What we had in mind was that suppose we go and establish a unit for nutraceuticals somewhere in Europe or US, where in nutraceutical the demand is for they don't worry about the colors of the capsules. They worry only about, say, vegan capsules of only transparent or white color. So the batch sizes are really large, and these 7.5 million capsules can bring in the efficiency or scale of production, where the cost of production is comparatively high in those countries. So with that idea in mind, that we had worked on this prototype, an appropriate time, if we decide to put up a facility in those countries, we will be putting up these high capacity machines.
So I have another question. So someone also asked me this. So I would like your insight into this. So you also supply capsules to Pfizer. Now Pfizer has, I understand that Pfizer's India operations is what you are supplying to. But now that you have you have basically the capacity as well as chops as well as the intent to move to a different geographical location. Uh, will you be able to travel along with Pfizer to wherever the operations are, setting your factories closer to their production sites, and as a result, have access to the entire Pfizer ecosystem? And
No,
Pfizer here is just a placeholder for any of the numerous MNCs, marquee clients that you're serving. So, yeah,
yes. So we are supplying to Pfizer's India operations, and by virtue of that, because Pfizer does approve a vendor only after their for critical products like capsules by after their international audits. So by virtue of that, we are also qualified to supply to their other country operations. So at this moment, we are in discussion with their Mexico operations as well, and they are evaluating the product. And I believe that over a period of time, we will get more opportunities because of such audits by companies like Pfizer. Uh, Now, if a requirement comes, if the demand is so high that it requires that we go to those countries and put up facilities, yes, we are open to such kind of ideas. And over a period of time, that is going to happen.
I see. So I'll just go back in history for one last question. That in 2015 to 18, you had a kind of a tumultuous period. The period when basically the sub-Saharan African GDP kind of crashed from 5% to 1%, and there was a lot of currency depreciation. Now, I was curious that basically when you are exporting to those countries, so is it because, and the public finances was played a very big part because they are basically oil exporting countries and commodity driven countries. So I just was curious that how public finances, were there government tenders, or how did this play out? So what really resulted in the reduction in growth?
Basically, we never supplied to any government bodies. These are all private pharmaceutical companies there. The 2015 to 18 period was marked with a downturn in commodity cycle, and then the price of most of the minerals and oil went down, thereby taking the GDP of and the exports of these countries down. The major drawback we had in that period was that our exposure to specific countries like Nigeria was very high. Out of my total export, 60% was going to Nigeria. And secondly, from India also, we were selling to a lot of companies who were exporting their finished products to countries like Nigeria, which faced sudden downturn. So the
Got it.
double whammy caught us on a surprise. And that is how our post that period, we took a complete turn in our marketing strategy. We said we would diversify, expose to many other countries, and in domestic market cater to large volume buyers. So that strategy has paying off us off now at this moment. Currently also we are seeing a similar scenario developing with the countries like Nigeria facing currency depreciation almost 80%, like Egypt facing 40% depreciation. So, okay, we have exposure to Nigeria, but not that great. We do have a number of other countries which are doing well. So exports are seeing us well. And despite a little bit of slowdown challenges in domestic, our exports have been growing. So there we are able to balance the whole demand and our realization.
Thank you. Thank you.
Thank you, Som. So Sunilji, one question I wanted to ask is that your business is such an interesting business, and it has been growing so consistently over the last few years. Why are we not holding quarterly con calls? If you can, or do we have any plans to hold it in future? Because that will give us an opportunity to present our business in front of a lot of other group of investors as well, and institutions as well. So what is stopping us from doing that?
Ankitji, I would say that at the moment we are releasing press releases and presentations, investor presentation at the end of every quarterly results board meeting. Maybe at appropriate time we will do quarterly calls or maybe annual call, half-yearly calls, whatever. Appropriate time we will do that.
Great, great. Anything else, Soham or Navid, you want to ask?
I'm good. That's it.
Thank you.
I have nothing to else.
So I think there are no more questions on the chat box as well. So thank you so much, Sunil ji, for taking time out on a Sunday. And you were very candid with your answers. You didn't hide anything. It was all clearly visible. And thank you again to Abhishek, who has helped us with this. And thank you, Soham and Navid, for asking some great questions. And at the last, thank you so much for all Mission Smile members who have been patient listeners and asking some really good questions on the chat box. Wish you all the best for your journey, Sunil ji, and hope to see you in a con call soon.
Thanks, Ankit ji. Thanks to you.